Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostick, Katie Greifeld, counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast. Carol Massar returning, Tim Stenovec returning, and we now welcome our audiences who are returning to see us. Bloomberg Television, Radio Quick Take, as well as streaming on YouTube. 1% gain on an S&P 500, right around the highs of the day.
Yeah, absolutely. Look at this. We're seeing some buying into the close here. The standout, though, the NASDAQ up about 1.7%. Also standing out, semiconductor names. They're up about 1.5% overall. And don't forget, Intel reporting after the close, Tim, that's up 1.1% right now.
All right, we just got some commentary from Aaron Cannon, the co-founder and CEO of Clear Harbor Asset Management, who actually painted a picture that was a little concerning. He thinks we're going to skate along a zero growth bound and see the Fed become much more accommodative in the second half of the year. He said that if the economic picture deteriorates further, we could see the Fed cut rates in the second half of the year.
And that seems to be the consensus if you look at the bond market. We know that, 50 basis points of cuts are priced into the second half, despite, again, what
the Fed says
from Fed officials.
Yeah, it's really surprising to me.
It'll be interesting to see, though, if we get to that point, right? Because there is a broader question here as to if it is sort of a shallow recession, if it is not the worst case scenario, does the Fed really need to meaningfully move rates down from wherever that terminal rate ends up being?
Especially if they're right, still inflationary pressures that we continue to see somewhat in our economy, Romaine.
All right, a lot to cover here after the bell here. We are getting the closing bells right now, people clapping and cheering, and that's because it's green pretty much across the screen. The Dow Jones Industrial Average higher by roughly 200 points, or about 0.6%. The S&P 500 higher by more than 40 points, or more than 1% here on the day. And we should point out the NASDAQ, both the composite and the NASDAQ 100, higher by roughly about 2% on the day. Both of them, and we'll double check these numbers, but both of them appear to be closing above their 200-day moving average for the first time in almost a year. The Russell 2000 also getting in on the action, Carol, up 0.7%.
All right, look at the S&P 500. Most names in the index higher, risk on. 363 names, Katie, actually gaining some ground today. Only about 138 lower in today's session.
And if you look at the industry groups, there's a lot of good news here. Right up at the top, you have autos. A lot of that, of course, is Tesla after those reports yesterday. Energy, too, having a good day, up over 3%. You also have media and entertainment and those chip names. You look down at the bottom, not too many in the red, but way at the bottom, you do have telecom there, down 0.8%.
All right, let's get to some of the specific gainers. Katie, you mentioned Tesla, and this one pretty much holding on to all of its gains of the day, up almost 11% here at the close. Top of the S&P 500, the NASDAQ 100, up as much as 59% from its lows touched earlier this month, on track for, I think it is a fifth winning session. It's still off about 60% from its high back in 2021. You know the story, upbeat production numbers, demand, and so on. So nonetheless, a standout. We've got Intel crossing.
Intel crossing the wire right now. Let's start off with the revenue numbers coming in at about $14 billion. I'm not quite clear of the comparison here, but on an adjusted basis, the street was looking for about $14.5 billion. So a slight miss there. Adjusted EPS coming in at 10 cents a share for the quarter. The street was looking for 19 cents. So that also appears to be a miss. Here's your forecast going forward. First quarter adjusted revenue, the range the company is giving, $10.5 billion to $11.5 billion. That would be almost $3 billion less than what the street was looking for. On average, the street was looking for about $13.96 billion. Intel, guys, giving a forecast range of $10.5 to $11.5 billion of revenue for the first quarter. You can see, right, guys, the share is now down about 7% in after-hours trading.
Again, I go to the press release to get commentary from Pat Gelsinger, the CEO of the company, who says that despite the economic and market headwinds, we continue to make good progress on our strategic transformation in Q4.
What is going on with this company? So first quarter adjusted revenue, EPS that they're giving, the guidance is at 15 cents. So that's also well below consensus by about 10 cents. The street was looking for 25 cents a share. I'm just piggybacking, Tim, off the quote that you were just reading. Where's the turnaround?
I think a lot of investors are asking that question as well. I mean, that's why Pat Gelsinger was brought in to make this turnaround. The company's CFO.
First quarter adjusted gross margin, 39%. The street was looking for 45.5.
That's a huge miss.
Again, Tim, where is the turnaround?
I think that's a good question that will be asked on the earnings call. The CFO is saying that they're going for cost reduction targets of $3 billion this year, and they're setting the stage to achieve $8 billion to $10 billion by the end of 2025. So That's significant in terms of cost reduction just in the next couple of years.
Yeah, this is what they've been working on. But nonetheless, it's been a slow turn in getting it back on. I'm looking at something like AMD, too. It's down about 1% here in the after hours. So we're seeing some spillover, Katie. But these are really disappointing numbers.
Really disappointing numbers. And you can, again, see that in the stock, down 5% at the moment. Stock had been down over 40% in the past year. But to your point on AMD, we know that they've been taking market share. So interesting to see them dip on these numbers as well.
And it's also interesting, too. I mean, they're talking about cost reductions, as you would expect with a report like this. But the question becomes, this wasn't a cost story for Intel. I mean, we know that they certainly had some fat that they had to trim, but this really wasn't about their costs. This was about them being competitive. This was about them transitioning to the new generation of chips and chip technology. And I guess the big question right now is, how far has Pat Gelsinger gotten them in that direction?
Well, listen, none of this, you talk to our Ian King, none of this happens overnight, right? It costs a lot of money. It's a lot of development. It takes a while to move the needle. And, you know, it's interesting, going into this, Cowen's Matt Ramsey put out a research notes, and he said, few names in our coverage have as universally negative sentiment surrounding the company's fundamentals as done Intel. And as a result, you know, you look at what they reported for this quarter and their outlook, it kind of plays into that narrative.
And we'd be remiss in not pointing out, yes, this does take time, but we're coming up on the 2-year anniversary of Pat Gelsinger taking over as CEO.
It's also come, though, at a time, and again, I'm obviously not making excuses for the company, and every other company has had to deal with this. The macroeconomic headwinds that they're facing right now, coming off a period of just really crushing demand, where a lot of these chip companies couldn't actually produce what was necessary for their customers.
Well, my retort to that would be is that when we do get AMD, which I think is next week, if I'm correct, when we do get NVIDIA, when we do get some of their other competitors, do you think we're going to see something similar, or is this sort of specific to Intel?
I think NVIDIA is a different story, just with the types of processors that they make, and you know, especially with the Chat GPT and the AI stuff that they're focusing on. But yeah, it'll be interesting to see if we get a similar story from AMD. But they haven't had the same organizational challenges that Intel has had.
Well, even still, I mean, you are seeing shareholders a little spooked right now. You look at NVIDIA shares down post-market, some of those other competitors too as well, AMD. So even though it is a different story, these are different companies with different fundamentals, definitely sending a little bit of a shudder through the chip space.
Yeah, you know, you got to wonder, it's not just about, you know, cost reductions, right? It's setting the company up to do well in the future and meet the demands of the semiconductor space. And you do have to wonder at this point, are they doing that?
Well, let's actually go. We're just getting earnings right now coming out of KLA. Of course, this is a big maker of semiconductor equipment and technology. Those numbers for the most recent quarter are actually coming in above estimates. EPS is $7.38. The street was looking for $7. Revenue coming in at $2.98 billion. The street was looking for $2.8. And as far as their guidance going forward, they're giving a range of $2.20 to $2.2 to $2.5 billion, which is just around the top end of the range, would just about hit the average of estimates here. So two different business strategies here with regards to what KLA does and what Intel does. But it does appear to be a little bit of divergence in their forecasts.
All right, let's get to another one that's very important in terms of the consumer. We're talking about Visa. Visa coming out with its first quarter EPS, $1.99. Looks like a beat year over year. That compares with $1.83. First quarter net revenue. This, too, looks like top line beat, $7.9 billion versus $7.69 billion, the estimate. First quarter adjusted EPS, here's your key metric, $2.18, 18 cents better than what the street was forecasting. And first quarter cross-border volumes at constant currency up 22%. So playing into another metric. What are we seeing with Visa, Tim? It's up about
1.6. Now it's unchanged, 1.5.
Yeah.
You know, I'm interested to hear commentary from Visa, given what we heard from MasterCard earlier, where it warned that revenue growth would slow faster than expected this quarter. Getting investors concerned, getting just analysts concerned that inflation has put a damper on consumer spending. Will we get a similar message from Visa?
It'll be interesting, too. We were talking to a couple of strategists last week who actually said that MasterCard and Visa might be in a better position, primarily just because of their fee structure and the idea that they're not necessarily completely wedded to discretionary spending. So just like when we saw with the personal consumption numbers today, we're still spending on the essentials, you know, personal care, health care, and, of course, housing and things like that. As long as that keeps, you know, going through credit cards, that still would benefit a Visa and a MasterCard.
Well, to that point, I mean, you are seeing MasterCard move a little bit higher after hours, along with Visa up about, 0.5% after a pretty brutal day today. So maybe shareholders on the back of these Visa numbers saying, maybe this isn't so bad.
All right, total processed transactions, 52.5 billion. The estimate was 52.9 billion. So we're getting some more in terms of what happened at Visa. But again, we're continuing to see some of these names move in the after hours. Keep a watch on Intel, seeing the pressure there. All right, guys, that's a wrap. Our cross-platform coverage, breaking down those earnings and more. Our cross-platform on radio, TV, YouTube, and Bloomberg Quick Take. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.